Today our first topic of SMC course is what is trend. Many of you may know about this course, but for those who don't, it is especially designed for them. People who are in the forex field must have heard this sentence so many times that trend is your friend, and it is true. Trend is your friend is called because you should always trade in the direction of the trend, because it is smart money. That is, banks, institutions, they always trade in the direction of the trend. The real movement in the market is due to the smart money. If all they are interested in is to move up the market, they will just buy into the market. We will also be successful when we trade in their direction. If we trade in the opposition direction, what happens is that the momentum in the opposition direction decreases, and smart money joins the trend, and we see a good momentum on that side, and we get a lot of profit. And in the direction against the trend, there are retail traders like us who don't know much about the trend and keep buying and selling. If we want to be a successful trader, we must learn to follow the direction of the trend so that we can trade with smart money and make a lot of money. We all know that if the market is going up, then there is a buy trend, and if the market is coming down, then there is a sell trend. The direction of the trend is also logical. Now we will see how many types of trends are there in the market and how are they formed. To understand this, we see in this picture that we have a low point from where the market goes up, and also understand that the market does not go straight up. It also makes some sort of return. Where there are buyers, there will also be sellers. When the market goes up, it makes a high and then makes a small retracement from there, but only slightly above the previous low, and goes back up. Now the market goes back again, and this time it breaks its previous high and makes its higher high. Here we can say that in an uptrend the market breaks its high and protects its low. That trend is called bullish trend. On the contrary, we have a bearish trend. We have a high point, that market moves down, makes a low and pulls back up a bit and back down again, and this time the market breaks its previous low, meaning below the previous low comes. The market once again retraces slightly higher, but this time it comes back slightly below its previous high and then goes lower again, meaning it is breaking its lows but not breaking its highs. This tells us that the market is in a bearish trend. There is another trend in Forex market which we call sideways trend. In this trend, the market is moving within a certain range, maybe slightly above and below that range, but keeps moving around it. Such a trend moves between a high and low. This sideways trend is not a trend at all. It is basically a trap of the market. You will see this sideways trend between a high and a low. Assuming the market is going to form this trend, what it will do is go up a bit and start moving sideways to its previous high, trying to show that the market is looking to sell out of that resistance, but we don't see the market breaking its highs. And we also know that the market is bullish, so we should not sell in a bullish market. For a short period of time you can sell in a bull market when you have a good market experience, but 80% of your stop loss hits will be in the counter trend, because at that time the market trap is more. Here the market will trap traders and introduce them to sell, creating double top, triple top type patterns. After that the market will sell off a bit and then go back in its original direction and break its previous high. So understand that sideways is not a trend at all. It is actually a trap created by the market. Or sideways is formed when the market is not bullish or bearish. So it was just introduction about the market trends. So see you in the next video. Bye bye.